Hey, what's going on YouTube? And welcome back to Tech Conversations. I am your host Guillermo. It is October 24th. Hope you're all having a great weekend so far. Let me know in the comment section below if you think tomorrow will be a red day or a green day in the stock market. Now in today's video, I want to talk about one of the best ways to determine how much a stock will move after earnings. Very quick and simple method here. It can really help you out, and I'll even show you how you can use this information to potentially enter a play for earnings. So before I get into that, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. Now, we have a huge earnings week ahead, and so I thought this video was appropriate for this week. Now, one big key thing here that I want you guys to understand is that this method isn't always going to be accurate, but most of the time it will serve as a reasonable, accurate estimate. Okay, keep in mind, I didn't make up this method. This is a method that's been around for a long time. Professionals use this. So first thing we want to do here is choose a stock that has earnings coming up. So one stock that has earnings this week is ticker symbol AMD. So let's go over to AMD here. I do own 100 shares of AMD. I've been holding these shares for a while. AMD has earnings on Tuesday after the market closes. One more thing I want to note here. This method will be a lot more accurate if you do this on the day of earnings, right? So if I were to do this on Tuesday, it would definitely be a lot more accurate, but I'm going to show you this here today just so you guys can know this and, try to use this for this week coming up. So first thing we want to do here for whatever stock you want to do this on is you want to go over to the options for that stock. So we're going to go over to the options for AMD. So let's go to trade AMD options here. The first thing we want to do is choose the very first expiration date following the earnings date. So the earnings date for AMD is Tuesday after the close. So the very first expiration after that will be the October 29th expiration. So I'm going to leave this as October 29th. Now, the first thing we're going to do is I'll just stay on calls here, but we are going to have to go to puts as well, but we'll stay on calls for now. First thing we want to do here is we want to find the at the money call option for this stock. So remember, at the money is where the strike price is as close to the share price as possible. So the current share price of AMD right now is $120, right on the dot. So this makes it a lot easier because that means that the 120 strike is going to be the closest to the share price because they're the same right now. So this is the at the money call option for AMD. Now, what you want to do here is you want to buy it or you can sell it. It doesn't matter. The only thing you need to note here is that you're going to want to do the same transaction for both the call and the put that we're doing here. So I'll just do buy. I'm going to buy this call. So I'll go ahead and buy this here, right? So it's going to cost $395. Now what I want to do is I'm going to switch over to puts. Okay, so here we are on the puts, same expiration. We don't change that. Now what I want to do here for the puts is, again, I want to go ahead and find the at the money put option. Now, since I'm buying, since I did buy for this call, I also want to do buy for this put. If I had done sell for the call, I would want to do sell for the put. So they just need to be the same type here. If you're buying one, you need to buy the other one. If you're selling one, you want to sell the other one. So again, at the money option for put is going to be the same concept. We want to find the strike price that's closest to the share price. Share price is right on 120. There is a strike that's also at 120. So this is the at the money put option. So I would also go ahead and buy this one. And this is going to cost $413. So this is a long straddle, right? When we buy two options, that they're, one's a call, one's a put, same strike, same expiration, that's a long straddle. If instead we would have sold it, that would have been a short straddle. But ultimately, what we want to focus on is the total cost. The cost here is $808. And so this is where we get our key information here. So basically what we can kind of summarize from this, right, is that this price will indicate kind of the expected movement of AMD after earnings. So ultimately the way we look at this is we can expect AMD to move upwards at most $8 and downwards at most $8. So if it goes up, it's mostly going to go to at most $128. If it drops, the most it's going to drop down to is $112. And again, this isn't always going to be accurate, but most of the time it will serve as a reasonable, accurate estimate. So we can expect AMD to be anywhere between $112, $128. And again, it's going to be more accurate if you do it on the actual day that this stock has earnings, which again is Tuesday. So now that we know that information, and again, it's called the expected move, we can actually use this to set up a potential play. And that potential play is actually going to be an iron condor. So here's what we would do then. Since we know that at most, this is going to go up $8, or at most it will drop $8. It'll be somewhere in between that range. Hopefully we can actually set up an iron condor with this. So I'm going to go ahead and remove this. I'm still going to leave the same expiration, right, October 29th, but now I'll set up an iron condor. The way you want to set this up is you want to start by selling a put at the low end of the range, which again, at the low end, AMD, the most we're expecting it to drop is $8. So I would put it at 112. So I would sell a put at 112 here, and then I want to sell a call at the high end of the range. Again, the most I'm expecting AMD to move up is $8, so I would go ahead and sell a call at $128. And then what I'm going to do is I'm going to buy a call higher than the strike of the call I'm selling. So I'll just do the 129 right away, and then I'm going to go ahead and buy a put under the strike of the put that I'm selling. So I'll just go right under it to the 111, and it's going to look something like this. So again, this is an iron condor here. We should be getting a credit for this, $37. You will have to put up collateral here, but ultimately this can be a potential great play for this, because again, the expected move here is $8 up or $8 down, somewhere between that range. And so let's take a look here at what this looks like. And again, the benefit of the iron condor, by the way, is that we're actually going to benefit from IV crush, because remember, after earnings, there will be IV crush. Implied volatility will drop a lot. So let's go over to option strat, and let's just take a look here at how this would look like. So here's option strat. Let's go to build, and let's go to iron condor here. And then again, we're using AMD for this example. So AMD. And then we chose the October 29th expiration. Again, the closest expiration following the earnings date. And then again, we're expecting an $8 move on AMD. So at the low range, would put it at 112. So we sell a put there. High range would put it at 128. So we sell a call there. And then we buy a call higher than the call we're selling. So we just did 129. We buy a put lower than the put we're selling. So we did 111. And this is what it looks like here. So we're getting a credit, $37, which is also our max profit. Max loss is 63. So not the greatest risk to reward, but again, there's a high probability that this will be profitable. And so here's kind of what it looks like. Break evens between 111.63, 128.37. And again, the best thing about the iron condor, the reason you'd want to use this strategy for earnings, is because you actually benefit from IV crush, right? And we can actually see this because there is an IV slider here on the bottom right for option strat. So if we take a look here, let's say after earnings, implied volatility will probably drop to 30, 40%. So check out what happens here if this drops to 30%. As you can see, you start to see more and more green, because again, iron condor benefits from a drop in implied volatility, which is exactly what's going to happen after the earnings date. So as you can see, this is kind of what it would look like after. So ultimately, that is how you can figure out very quickly what the expected move is. Again, it's not always going to be accurate, but a lot of the time it is going to give you a reasonable, accurate estimate. So anyways, if you guys have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.